Septembers are actually usually a pretty bad month. Only 44% of the time it's an up month. Most people think we're going to be down 1% or something. That's a historical mean. But if you're down in August, you already flip to like 60% probability that's an up month for September. But if you're up double digits year to date, September's positive if August is down.
So we already know that September is a seasonally weak period for the stock market, right? But Tom Lee is saying, hey, actually, when you're up in August, right? And when you're up in August, when you're down in August going into September, actually, September is usually a positive month. And also, if you add to that, when you're up more than 10% for the year, you're actually positive. So, will we have a positive year for the stock market, or can this bull market rally continue? Well, let's look at some of the risks, because if this continues, I mean, I really doubt that's going to be the fact. So we all know, today, if you're watching the news, the Saudi Arabian country started to cut production, right? Oil production. So we got oil prices on the rise right now. And we're going to look at those oil prices, but oil prices are breaking out of the big risk off level. That is a macro force. They're starting to cut all the way into December because the economy is weak, though, but they're still doing it. So kind of looking deeper into that risk, right? Here's a chart here. What does oil do? What is the real risk here? Because we do know if energy prices are up, well, that isn't necessarily bad for earnings, right? Could be bad for the consumer for sure, but earnings for the S&P actually might be positive. Here's the downside though, right? July CPI, when we had the big surge, 17.5% from crude, okay, CPI ticked up. It went from 3 to 3.2. Small change, right? Now, this next CPI report, September 20th, we're looking at how oil pushed in August. Okay, we're looking at the August numbers, and they were pretty much flat. So I don't think inflation's really going to be that bad in September. I mean, not in September, but in August, which is going to give us our reading in September. The issue is if we keep breaking out here in September to the, what is this, 90, 92 and above, well, then you're going to look into October and anticipate CPI climbing. And this would be the third month in a row that it climbs, right? That's what you don't want, is the trend to go higher. So we're keeping track of oil because it's the biggest input to inflation. August should be flat, shouldn't be too bad, but oil if they keep cutting production, then crude pushes up, headline CPI pushes up, and you get the dollar moving higher. And this next one is pretty much highlighting, hey, today we did have, let's click on this. Today we did have oil push up and rates pushed up. Okay, so we had rates go higher. Rates went higher as oil went up. Why? Because the risk to CPI go up, right? You're getting a stronger economy to some degree. And then you get the dollar pushing up. And the dollar has actually been breaking out, which is a big risk off signal. So the dollar's been breaking out. We're at that 105, 106 level. So this is pretty much the inflection point, the big inflection point. We'll see how that goes forward from here. All right. And then, okay, but right, there is something interesting happening in the market. What we're not seeing is bond volatility pick up, right? Why is this important? Because volatility S&P is going nowhere, right? There's nothing really changing. Alberto, I'll answer your question right now. If you want to jump in the YouTube comments, I'll actually be able to see it so it doesn't get lost here. I'll try to save it, make sure I don't lose it here. All right, what up, football legends? I'll try to make sure I don't lose your comment. I just want to finish this up. So is there a buyer in the bond market, right? So even though, yes, oil is going up, inflation expectations are going up, there actually is some good news happening, right? There is some positivity in the internals of the market, of the bond market. Bond volatility is coming down. So the collateral is, the market is not reacting as if collateral is at risk. And there's a real reason why. The question is there a buyer coming in to buy the bond market, right? Bond volatility falling. Maybe the US Treasury market is stabilizing, right? That's the signal there. It is actually stabilizing. Is there a buyer? Well, here's one thing that we've been seeing over the weekend, or since Jackson Hole. There's a lot of cash, right? This got up to $2.5 trillion sucked out of the market, right? This right here, this capitulation, right? This peak was $2.5 trillion out of the capital markets and into the Fed's reverse repo facility. That money's been coming out, and we just had a consolidation and then a break lower, right? What does that mean? That money is leaving, right? And that money is leaving the Fed. So we're getting trillions of dollars leave the Fed and come back into capital markets. Is it going to support US Treasuries? Is that why the bond market is okay? It's not freaking out because US Treasuries will be supported? Or is this just supporting liquidity in general? Will we see risk assets go higher? Is this going to go into risk assets? Typically, that is the case, and I think that is the case. Actually, we have Nasdaq outperforming the S&P today, and the Dow, and IWM, and there's a real reason for that. We'll get to that in a second, right? And this brings us to our next slide here, which is that S&P earnings growth, okay, is now bottomed. It is bottoming, right? The expectations, the estimates are going higher now. These are sectors, right? These are the different sectors. But if we look at the S&P in general, we're now back above negative, right? We are no longer projected to be in an earnings recession. We called this last month, last couple months, just looking forward at margins, global liquidity, and basically, big tech knows how to keep their margins. They know how to generate revenue, right? And fiscal policy, that's coming into play. CHIPS Act, Inflation Reduction Act, infrastructure bill, that's going to contribute to S&P earnings, right? So earnings are bottoming, and this is where investors get kind of excited, right? Yes, the macro forces are against us. Yes, the dollar is going up. That's going to suppress stock prices or risk assets in general, higher yields, higher dollar, higher oil. But if earnings growth goes up, the market is sort of like a beach ball being pushed down. As soon as those yields come down, as soon as the dollar starts to relieve, right, and start to roll over a little bit, boom, assets go higher. And there's a real and most of these earnings are coming from big tech, which is why the Qs are outperforming, because even if you do go in a recession, guess what? Big tech can still retain its earnings, right? Now, looking at the Fed data, right, or the Fed speak today, Fed wallet, the data is looking good for a soft landing scenario. I know a lot of people don't believe that, but it is looking good, right? Consumers are slowing, which is what the Fed wants to stop hiking. I think they do stop hiking. The market is pricing in still a 95% chance, or like 92% chance of a pause in September. So you might think, okay, well, oil prices are breaking out. Maybe this was what pushes them. But no, they're looking at core, right? Yes, oil prices go up. That does hurt headline CPI, but not this month. That'll actually price in for the next month. This month was flat. So this CPI should actually be good. I think, CPI comes in at somewhere around 3% or 3.2 again, maybe 3.3, right? We'll see what happens for the headline. The core, on the other hand, is falling, and the Fed is signaling, hey, this looks like a soft landing here. The jobs market is starting to soften, right? That's what they want to pause, okay? And that's Fed Waller. Fed also says the data doesn't say we need to do anything imminent, right? There is nothing they need to do. Now, hey, if price cuts continue, if demand starts to pick up for the oil market and oil breaks out, well, that's going to leak into a lot of services. That'll be a net negative, right? That actually will be a net negative. So let's jump over to the charts. I think we finished up on that segment. Yeah, let's jump over to the charts, because right now, I want you to see the outperformance, and then I'll get to your comment right there. Okay, we're gonna look at the charts, and we're gonna do Q&A when I'm done. We'll do some Q&A. Alberto says, if you had, hopefully I didn't miss it. See, this is what I hate about the TikTok. If you had a guess, do you think QQQ goes up or down over the next month? Goes up. I think we go up, and this is what I'm highlighting here too on YouTube is the charts. Looking at the Qs. Let me fit this in. All right, let's fit that in. I think the Qs go higher because earnings are being revised up. We know that, right? The biggest threat right now, the macro forces are against the market, but there is that reverse repo facility coming into liquidity coming into the market, right? So this is the reverse repo dumping, and I just want you guys to see this. It's dumping, but if you invert it, it is literally liquidity. Let's invert the scale. It is, oh, no, not this one. Sorry. Big mistake there. If you inverse the reverse repo liquidity, it's pretty much 1-for-1 for NASDAQ. Okay, so let's invert it. And you can see that we had that big push, right? We had the big push. Why does that match? The big push in liquidity coming back into capital markets matches the Qs starting to bounce there, right? So I think this liquidity picture, or this is like a cushion. I think that's going to keep the market going higher as long as no big, we have no big risk. We do have fiscal coming in. We have earnings being revised up. You have inflation on the core side coming back down. Headlines looking more sticky. We might get that flip where headline starts to stick while core starts to actually come down. So Qs support for 372.80 if we're looking at QQQ. That is from the resistance level from the Jackson Hole meeting, right? 373. We'll call it 373. I think we consolidate around here, but if you see Qs versus the SPY, right? SPY is a little weak today. The Qs are stronger. And why would that be? Well, if you are heading into recession, if rates are going to stick a little higher, well, who can still beat inflation, right? Who can still outgrow inflation? Who can still profit from the money coming in? It's going to be the Qs, right? The big mega cap tech again are going to lead this rally to the upside. I believe that is my thought looking forward to it. And especially when you get this reverse repo liquidity coming back into the market, it's going to want to take risk where there is growth, right? And that's the growth expectations, is that the Qs can continue to, not that SPY can't grow. Good morning. How you guys doing? Not that the SPY can't grow, but we know the SPY has has a lot of big tech in it, but the Qs are heavily weighted with big tech, right? A lot more weighted. If we look at the Dow, this is more value stocks. Look, they're catching I don't want to say a bid or a put, but they're stalling right now. The Dow is still on trend, it's still an uptrend, but they're starting to stall. And I think that is because, nobody wants to take a risk. Well, I don't want to say nobody, but there's more appetite for risk right now. Even though it seems like, oh my God, there should be no risk in the market. There's more appetite for risk. If we look at how the market is pricing in hikes, the market is pricing in a pause in September. Could they keep hiking? Yes, they could, but it's pricing in a pause at the moment, right? IWM actually really falling. And I think this makes sense because we thought rates would come lower, which would mean that these riskier assets, not big tech though, right? Risk assets with no earnings, which is, small caps, they don't really have earnings. They're still in growth phase. Excuse me. Ooh, excuse me. So small caps, right? They're not profitable yet. And if rates are still higher and they're not profitable, well, their valuations get a little worse there, especially with elevated rates. Versus tech is also a risk asset, right? Qs are also risk assets, but they're earning the most. They pull the most EPS in the S&P. And when we looked last week, if you watch the newsletter, if you pay attention, most of those earnings in the S&P are coming from big tech, information technology, consumer discretionary, Amazon, Tesla, right? A lot of those earnings are coming from tech in general anyways, right? Look at the equal weighted average, it's down. What does that tell you? That most of this is being pulled by by tech again, because tech is not equal weighted. It is concentrated in technology. Okay. Now, does that go for Bitcoin? Not really. Bitcoin's narrative is going to have a lot to do more with the ETF, but I know there's a lot of FOMO coming. There's a lot of indications that this is going to continue to move higher, including the ISM manufacturing index, right? And we'll go over that in a second. Good morning. How much capital is needed to make over 210,000 a month traded trading? I wouldn't think about it that way, to be honest with you. I don't think there's so many ways to do it. That's not the right question in my view. How much capital is needed to make over? Trading is not consistent. It's opportunistic, and you got to learn, maybe trade a paper trade for a while first and know your system. It takes years to be a good profitable trader. You might make money in an up market just because everything goes up, but it's easy to lose money if you don't know what you're doing. So I would never say there's a certain amount of money. I wouldn't even advocate for trading. It's too hard for most people. And investing is easy, a lot easier. Swing trading might be a little easier. Anyways, yeah. How's everything going? So that's what we're looking at here is, and I'll get to your guys' comment. Hey, broski, what up, Dimaj? What up, Laguna? How you guys doing? Glad to see you're doing great. You too, Dimaj. I'm glad you're doing great today. Good to hear from you guys. Thank you for the direct out. Keep up the incredible work. Amazing, helpful content. Thanks, man. I'm glad. I'm just trying to get straight to the point here at the open, and then tell you my thoughts and go through sort of, the macro forces, the technicals, the macro. I don't think there's a channel that on the web that goes through the technicals, the macro and the fundamentals. Am I the best macro analyst? No, but I know enough to give you, I know enough and I do enough research to give you some direction. Technicals, I'm probably, technicals probably my forte. I know the technicals a lot better. And then fundamentals, I mean, those are pretty easy. You just read the fundamentals, and fundamentals, I'm not the best either. But I do know when you put them all together, I don't think there's nobody better than me on the net for that, right? Maybe there is. Point them out, and I want to see his content. But either way, getting back to the point here, Ethereum, Bitcoin, right? Those are going to struggle because long rates are still up. Long rates are still up. But here's some positive news on the rate cycle. 2-year is weakening versus the 10-year. Okay, means the curve is inverting. Now you don't want the 10-year to go up, but you do want more. And I think what it is this money from the reverse repos coming in somewhere, right? It's supporting the capital markets, it's supporting bonds, but it doesn't look like they're it's really buying long term, because if this is going higher, it's going to support treasuries. But if rates for the long years going up, that means there's not a whole lot of support. You want rates to come down. That means they're buying those bonds. On the short end, anyways, it's a little weaker. So I think what's happening is reverse repo money is going into risk assets and going into short-term treasuries to support the treasury market. And one of the signals for that is bond volatility is down, right? Bond volatility continues to fall. So, there's no freak out in the bond market. Lending in general, or collateral, is not really at risk right now, right? That's what it's saying. Collateral is not at risk. Credit markets, right? For the US anyway, US equity credit is not at risk right now. We're not seeing that. We're seeing that credit, junk bonds, right? High yielding bonds for equities are still on trend. They're still on trend, right? The market might be consolidating here. So let me remove this again. We might be moving sideways for a while, but again, let's draw out kind of what this might look like. I think what it might look like anymore. Did I miss any comments? No, I don't think so. I think what it might look like is definitely we see this wedge start to form here, right? Higher low and then higher high. Let's draw that wedge out. Okay. Let's say we come. Oh, no, I don't want to. That's not the tool I wanted to see. I don't want to see a highlighter. I want to see I guess a brush. So we come down, right? Maybe we break a little lower, we come back up, who knows? But if we start to tighten right here, I see a wedge start to form for the S&P. Is very bullish wedge pattern. Oop, no, not that. That'd be very bullish for the market as we get this wedge. So I'm watching this wedge. We don't know exactly how the price is going to form. Now, what's going to be the breakout? It's going to be CPI in September 20th. We got 2 weeks from CPI. We got 2 weeks from today, right? What's going to look like? Here's your wedge. Here's your wedge. We could wedge for a while. September is typically weak, but keep in mind, it's not weak if you're 10% up on the year. It's not weak if the previous month, August, was negative, which it just was, right? August was negative. Therefore, that whole seasonality effect actually doesn't hold water. That's what Tom Lee was saying at the beginning of the video. It doesn't hold water, right? So that's what I'm looking at there. Now, looking at Tesla, still looking good, right? It's now pushing the top of that channel there. Tesla is pushing the top of that channel, looking pretty nice for a breakout. Maybe not today, but as long as it comes back and holds 250-ish for Tesla, about 250, maybe comes down to 240. That would be the golden nugget. I actually missed this last week. I wanted to see 241. I got to 242. I wanted to hit my price. I can stay patient though right now, because I do know that the downside is these macro forces, right? When you get oil starting to move up, well, that's not a good signal, right? It's not a terrible signal, but you want it to move sideways. Hey, maybe the S&P can still, move higher with this. Who knows? Right now, it's not freaking out too bad. Volatility for the S&P is still pretty negative. It jumped and it came right back down. So maybe it's not that bad. Let's look at the put to call ratio, right? Market internals. Are we seeing anything that? No, they're coming back down, right? There's nobody's really buying puts. So it's just oil right now. We're not getting a whole commodity shock. We're not getting a full commodity shock. Look at commodities. If we go to wheat still falling. Okay, wheat still falling. Let's get this back to the candlesticks. Wheat still falling. Copper is probably consolidating a little bit, right? China is recovering. And hey, guess what? The whole China narrative is that they're collapsing is just not true. Their PMIs are pretty much break even. They're at 50. They're contracting. They're just slowing down. They're not collapsing. Their two property markets, yes, they collapsed a long time ago and they're not recovering. They're not getting capital, but they are cutting rates. They are liquefying. Their policy is easing at the moment, right? So dollar also breaking out. This too is gonna now there's scenarios where the dollar can move up and equities can go higher. That is definitely a scenario. I don't think it's the big probability of the scenario. The only way you get BRICS is not going to bring the dollar down. It's just not going to happen anytime soon, regardless of what you hear. I can debunk that right here. If you think that, I'll probably actually going to do a little video about that tomorrow about BRICS and the dollar. But for the most part, yeah, the dollar still has resistance, the major resistance at 105.80, 106. Man, I don't want to see it go that high, but it is going that high. at the moment, and that's going to definitely suppress risk assets in general, right? By far the best I've seen. Hey, Dimaj, appreciate it, man. Shout out to you. Let me hit my button. Thanks for being a day oneer. Oh, I don't want to do that. But yeah, man, shout out to you, Dimaj. Oh, also, I wanted to point out, guess who's buying Zoom today? Guess who's buying Zoom? Guess who announced that they're buying Zoom? We're going to look at Zoom. If you've been on the channel, you know that what I'm trading is Tesla. I'm usually trading Tesla, and I'm taking a long position on Zoom. But, oh, Zoom is breaking. Oh, it came back down. Okay, it started to retrace, and I'm waiting for this consolidation here. 75. I want to see it hold 75, but Zoom, guess who's buying Zoom here? Any guesses? Anybody want to take any guesses? Who's buying Zoom? I always show him on my channel. He's one of my favorite analysts here. Going once, going twice. You guys probably can't type fast enough. It is, and you know what? I think I will show it in a short on the YouTube channel, on the TikTok channel, but it is possibly, maybe not. We'll see how I do it. It's Josh Brown. Josh Brown is buying Zoom. And there's a lot of AI they're doing. We've been talking about this. It's taken a while, but Josh Brown is buying Zoom. That's going to cause FOMO into the market. Let's dive into sort of the intraday technicals. Okay, nice. Look, there's your pullback. So you break above resistance 72 resistance. I still want to see 75, but you did get above 72, which was the prior high, 72.50. You got above that. Now you're getting now you're starting to see a pullback, right? This is a pretty sharp pullback. Is the overall market in support? Probably not, but that's your flag pattern right there. It should be holding above 70, really 72.50. You want to see it hold 72.50, and if it does, if it consolidates, hey, maybe you add to your position, or maybe you start to enter that trade. The question is it shares? Well, it doesn't matter. It matters who you are. I think this goes a lot higher, especially if the technicals, the macro all align. I'm looking out much further than most people, probably 6 to 12 months, somewhere between 6 to 12 months, long options into 2025. I think this is just going to reverse. Hey, let's say that, COVID does come back. Well, what is the case? Well, you have more, you're going to have stuff like Zoom start to catch a bid because demand has to pick back up. Even without it, even without Zoom, you're still going to, or even without, another pandemic, which is not going to happen, you're still going to have more demand come into this name. So I'm looking at Zoom here, keeping my eye on Zoom, big level that is starting to break above. It needs to hold 75 though. It really needs to hold 75. It's gotten above the 72 level, 72.50, 75. That's pretty much the prime zone there looking at Zoom. Okay, XLE, right? Looking at the sectors, XLE or energy is definitely outperforming. We got energy outperforming now. Of course, obviously, KRE, right? Starting to roll over. Now, this is interesting, right? It's not rolling over yet, but it is, it's trending up. It's broken the trend. Maybe nobody cares about the trend. But if rates remain elevated, the question is, how bad do regional banks feel it? Are they going to start feeling it? And if they do, the Fed's lending facility must pick back up. Okay. XLF, it's just retracing, nothing too major. XOP, right? Oil and gas. A lot of energy plays doing well, right? A lot of energy plays doing well. Solar is still sort of lagging. We'll see what ENPH looks like. I'm gonna try to stay solid in that, or not solid, but I'm trying to keep my mind on ENPH. That could be a nice swing trade going forward. And then energy, I'm sorry, this is not energy, this is tech. Tech still doing well. I think they come back. SMH, look, this thing is on a rampage higher. Chips, I mean, you're just not going to change the secular narrative for AI and chips. It's not going anywhere. We should be moving higher. Communications, right? This, and also if you're looking at Zoom, XLC is the ETF that is going to help you with Zoom. If it goes higher, Zoom is within the communication sector, so it should actually, be a proxy to the wind. Where is the wind blowing, right? I always say that if the wind's blowing a certain way, whenever if you watch Hard Knocks, you see that Aaron Rodgers picks up grass and he throws it a little bit to see where the wind's blowing, to give him, a good understanding of, is he throwing into a headwind or is he throwing into a tailwind? So as it, just thinking about that when it comes to stocks or investing or trading in general, usually it's trading. For Zoom, the grass blowing or the wind is going to be the big ETF, right? It's the overall market, also the ETF, and it is in the communication sector. So check that out. Industrials sort of struggling here, right? But they've had a nice run. So industrials are struggling. Consumer discretionary looks like they're wedging. Wow, this is nice. Looks like they're wedging for a breakout. They are making higher lows. If they do drop, what is this, 132? Maybe they're in trouble. Maybe they're in trouble a bit. Right, there we go. Let's make that a little bigger, a little thicker there. And then who is this? Biotech. Biotech, high rates just hurt biotech. They're not going to do well. Wait, was I looking at the wrong one? Oh, no, I was looking at, my bad, not consumer discretionary. This was healthcare. That makes more sense. Healthcare is wedging. Healthcare, I think, is going to do well. Consumer discretionary is who was got those mixed up. Consumer discretionary looks like it's trying to break out also. And this is, heavily weighted by Amazon and Tesla. And there's some other consumer discretionaries, but this is more of the cyclical index, more cyclical. So are consumers coming back? Are they going to be spending on higher ticket items or services in general? Now, the defensive stocks making new lows, right? Defensive stocks making new lows. No one's interested. My guess also is that retail and utilities are also weak. Why? Because earnings are not looking good. If the consumer slows down, right, then they're in trouble. For Amazon, for Google, if the consumer slows down, who cares? They're still going to buy their YouTube subscription, their Netflix subscription. What they're not going to do, so what's not going to happen is businesses are going to stop spending. They're not going to stop spending. So that's why big tech's going to do well, because businesses like Apple, Google, Amazon, they're all buying each other's services. They're still using each other's services. And that goes for the rest of tech. Technology services for businesses are not going anywhere, but the consumer might slow down. Therefore, retail looks weak. Therefore, utilities looks pretty weak. Defensive looks weak. I mean, hey, it is what it is. Builders pulling back. They've been pretty strong because the housing market is recovering. And that's specifically in the multifamily home sector, right? Real estate still looks kind of trashy, but we'll see. Who is this? This is home builders. Okay. And then you keep your eye on home builder sentiment. So that's what it's looking like there. Now jumping over to tech here, ENPH. Ooh, ENPH is consolidating. Let's say the RSI. The RSI is starting to climb. This thing might, rocket higher. It might rocket higher, especially with the Inflation Reduction Act starting to hit in Q4. So that's the catalyst here for ENPH. The Inflation Reduction Act, we already know Tesla's going to benefit from that when it comes to the tax credits, right? The EV tax credit, $7,500 tax credit. How are new building permits doing? Carbides, what up, Carbides? Did I miss anybody else up here? And again, if you want me to see your comments and not get lost, jump over to the YouTube. I'd appreciate it if you guys can. If you can't, that's fine. SPY spanked me today. You try to short SPY or go long SPY. How are building permits doing? The last time I checked, building permits were well. We'll look at it here. So if you are on YouTube, I'm gonna go show you the data really quick. How I go through my data. This is how I'll check. I'll just go US building permits, right? US building permits, boom, click on it. And it brings me to here, which US building permits, let's go to the 10-year. I think they bottomed out earlier. They're starting to pick back up. And this is mostly because two things, right? Fiscal policy. We always say this: policy drives stocks, and policy drives stocks, and earnings drive stocks. And the macro, you got to keep track of it. So there is onshoring manufacturing into the US. There's building. There's a lot of building being done. If you're in big cities, you can see the apartments. Like, just look around I know it's anecdotal, but apartments are going up like crazy in big cities, right? I see new apartments in Phoenix every day. I just talked to somebody in Florida and they were in Miami. Or was the other person in Texas or Dallas? And new apartments. Oh, Denver. My dad, he lives in Colorado. He said Denver new apartment builds are going up like crazy. And another guy, one of my friends from college, also same thing, said over there in Colorado, apartments are going up like crazy. So building permits are picking back up. They're not going straight up because we have some headwinds here. But if you look at apartment builds, where I'm gonna have to find that data again, I usually get it from Ed Yardeni. Apartment builds in general are also at all-time highs, I believe, year on year, something like that. So they're still pretty strong. I think there's going to be a big secular shift, right? If you ask me, I think there's going to be a big secular shift into apartments. You can now own and rent your apartments. Okay. That's what's going to happen into the future here. It's already happening in New York and other cities where you can buy your apartment, right? You rent it out or you own it. That's going to be the norm because rates are too high for one. Housing prices are just too elevated. And when the Fed cuts rates, when they do cut rates, prices actually aren't going up. They're going lower because people will start to, I think this is a secular trend. I could be wrong. I think they're going to be moving into non-interest rate housing, right? Non-interest rate housing. And you say, oh, okay, well, they're losing. No, they don't want to take out all that debt for one and pay a high interest rate unless rates drop significantly. And then number two, I mean, most people are struggling, right? Financially, they got to share apartments with other people and they don't have the credit, right? They've gotten screwed over by student loans. They've gotten screwed over by crappy jobs. They've gotten screwed over a lot of ways. So they're not going to be really buying new houses, right? And I think there's just going to be a lot more rents. Now let's jump over to what the market is pricing in as far as Fed hikes in the next meeting, kind of shifting over a little bit. And I'll answer the rest of your questions. Let's see what else we got. I'm moving with in with mind growth. You gonna move in? Guess who's back? What up, big man? Short. Oh, you short. Okay, you shorted S&P. Okay, you shorted S&P. Uh yeah, man, I just don't see the S&P weakening that much. The risk is oil, but earnings are being revised up. Market doesn't care, right? Earnings are higher, the market doesn't care. And that reverse repo liquidity, that is coming back in. That is pure liquidity, right? Now, is it going into the actual stocks? I don't know. We don't know exactly what it's going into, but it is leaving the Fed. It is a cushion and it's strengthening the overall market. I'm just waiting for crypto to break out. I think we're getting close to that. Chainlink becoming the tokenization asset for tokenizing everything, big market. And obviously Ethereum is the big platform for all Web3, for all crypto, blockchain in general. The most dominant. Bitcoin is the store of value network, the savings account. Um, can't be debased. So this is what the market's pricing in, right? Until this changes, which I don't think is going to change, we can look at the data going forward. Is there anything that we can see this week that causes the market? What is there any factors that could push growth higher or inflation expectations higher? Keep your eye on oil. That's all I'd say. If it just goes really fast higher, it's going to be bad. But rates can take care of that. If you see bond yields go up, they're pretty much hiking for the Fed. If you see the dollar go up, it's tightening the global markets. And maybe the Fed doesn't hike based off that. They're more so looking at the core, the savings, the core rate, right? The core. And I don't think they're hike. I think they're done hiking here. Tomorrow we get ISM services, right? If those, no, this is a key data point right here, key macro. We're gonna get August PMIs or business activity in the services sector. So far, this has been keeping us in not recession territory. This has been keeping us in in contraction. I'm sorry, in expansion here. What the heck is this? I don't want to see this. It's keeping us in expansion. Dang it. I don't know what I pressed on here. But anyways, we're going to see, this is the expectation. It comes down a little bit. So if services come in hotter than expected, which tomorrow it's expected to come in, let's see what the expectation is. ISM PMI is expected to come in at, I guess there's no expectation on this one, huh? I'll have to see where the expectation's at. Either way, if it comes in hotter, then we will probably see Fed expectation, or the expectation for rate hikes to go up. You want to do a thumbnail designer, Shubham? All right, well, email me, um, send me your prices. The tough thing about thumbnails is, in the market, well, maybe a thumbnail doesn't matter. Well, email me, tell me how much you're charging me, right? Tell me how much you're charging me. Maybe it'll make sense for me. Um, okay, so yeah, that's what we're looking at. China is not falling apart, like I said. And anyways, let's get back to the charts. Back to the charts here. And then I'm going to take a quick bathroom break. I'll be right back. We'll do some technicals. All right, here we go. Um, yo, what up, Watermelon? How you doing, Manny? Moving in with Mind Growth. That'd be cool. Get our investment. Our man, if you ever moved in with me, you're gonna get fitness. You're gonna get fitness, mindset, finance, all that stuff. Also, I'll be coming out with a podcast pretty soon here. I'll be trying to do a weekly podcast or bi-weekly with one of my one of my college friends. He's a very successful guy, built some businesses, and yeah, we'll see. We'll see if you guys like that content, maybe. So ENPH, right? Looking at the technicals here. Um, let's look at big tech. What are these technicals looking like? I haven't really looked at them yet. Just been tracking Tesla here. Also, what do you guys want to see? So ARC still holding the trend. Nice. ARC had a big bounce off that trend. Look at that. RSI at the bottom. RSI, I love RSI. RSI is probably my most favorite indicator other than price action. Obviously, you got to watch price action, but you're getting what? You're getting higher lows, right? Boom, higher low. And they're coming in convergence with the oversold territory, right? In an uptrend, right? The overall market is up. So this is good for Zoom also because Zoom is one of the biggest holdings of ARC. So as long as ARC goes higher, that is going to blow the wind, become a tailwind for Zoom, which is why I like Zoom. And it's breaking out. It's nearing breakout over that $75 level. We'll see how that plays itself out, right, going forward from there. And so that's ARC. Now moving over to Apple, right? Is Apple? Oh, Apple. And Apple's a bellwether for the overall market, right? If Apple's moving higher off the trend, off support, well, it's going to carry the market too, right? It's bigger than IWM, like it's bigger than 3,000 stocks. It's the same size. It's filling a gap here too. So Apple looks strong. They're coming out with the new phone. What is it? September 10th, something like that. I'm not sure. I don't remember. But they're coming out with their new phone. They're going to refresh. Oh my God, demand is low. Look, China's going to be stimulating. Earnings are starting to bottom here, and there's still a lot of demand for. Oh, don't sleep on for Apple in general, right? Because of the business model. Don't sleep on AMD. I sense an aggressive move up. Lots of shorts covering. Yeah, AMD. Let's check out AMD. We'll jump over to AMD. I like that. I try to trade AMD so many times up in here, right? Which was what this was like July. I just couldn't get it. It could not break out. And maybe this is the time. Maybe it's time to break out. Look at that RSI, very suppressed RSI. Now it's starting to move up. So this is a really good opportunity. What's going to set off AMD? Well, you got some chip stuff going on in China. You have relations with China. Who knows what's going to happen? But that Inflation Reduction Act and the CHIPS Act still coming online. That stimulus still has to come hit. So maybe a break over 112, right? Maybe a break over 112, break and retest. And you're looking 6 months out. You're looking 6 to 12 months out. That's what I would do anyway. That's my strategy. Not day trading AMD. It's a dangerous stock to trade. Day trading if you're not used to it. Anyways, yeah, AMD looks good. Look at that giant wedge. I mean, this is one of the most bullish patterns. I think this is the most bullish pattern that you want to see in a market, right? In a bull market, which is a falling. You could call this a falling wedge. I think it is sort of a wedge, right? You could say it's a flag, but I think it's more of a wedge because it has these big moves, starts to tighten up, right? Starts to tighten up. Maybe it has one more pullback and then boom, off to the races, right? Again, you need the overall market up. And what are we getting? The Qs go up. Why? Because the Fed's probably going to pause, because money market fund liquidity is coming back into the market, into risk assets. I think that's what's happening. That's my guess. We're getting the risk asset liquidity come in. And it is what it is, right? It is what it is. But yeah, AMD does look really good. Over to NVIDIA, right? What does NVIDIA look like? NVIDIA might very well just push to 1,000 just slowly. Look, this is what I think. I think NVIDIA is going to look like Meta, just slowly grind higher up to 1,000. I don't want any piece of it because I think it's not the best risk reward. I'm not a fund manager. It doesn't fit my risk profile right now. It could be a nice trade. It's $500, nice option trade, but I'm not interested in it. I just want to point out NVIDIA probably keeps grinding up. Though that's what it looks like. Going to Amazon, great opportunity here. I think Amazon is a big opportunity that, this thing has been lagging since after the pandemic. It kind of reminds me of Zoom because there's so much demand during the pandemic, right? And then once that was it, you kind of peaked in the retail demand. You kind of peaked there. you kind of peaked in that demand, but now we're starting to get back to, the AI narrative and Amazon outperforming. It's been moving higher, it's been suppressed. And I think Amazon has a big run here. This is sort of like Tesla, where it hasn't had that big blow off top to the highs yet. 37% to the highs. It's not the old Amazon where you could trade options and get this fat delta on it, but it is still looks really well for. Look at this, it's just trending higher, right? Technology is trending higher. What up, Isan? How about Disney? Yeah, we'll look at Disney here. Let's take a look at Dizzy. Disney looks like trash, man. I thought it was gonna find support. You guys know, I'm just telling you straight up, I don't like Disney. I don't like Disney. First of all, it doesn't have no risk to it. Like, it's not a grower. I think like, they have so much infrastructure. Not even just political wise. I just don't like Disney. I know a lot of people like it. Like I said, one of my friends likes it. He's probably pissed right now. I know he's pissed actually. And I don't like Disney. I don't see it surviving the long haul. Just because the culture is changing really quickly, and they could capitalize in crypto. I think Disney's big move for the long run. This is just fundamental wise. They got to capitalize in crypto. If they can tokenize their brand, if they can tokenize their brand, I think they do well again. In the short term, they found resistance against the prior support 84 and then sold off. So I don't know what's going on with Disney. Maybe they have too much inventory. Maybe a lot of people aren't going to the parks. I don't know. But it isn't a falling wedge. I mean, it's the only reason it's not bullish. It's not coming from the highs, right? This is only bullish pattern when you're coming from the lows, and then you get this wedge, right? But you're coming from the high. So to me, it looks like Disney has more pain to go. And I just don't like Disney. I don't like Disney, but nothing personal. Just it is what it is. I don't even know what's going on with Disney. Maybe there's some fundamental stuff that's going on with them. I haven't really looked into it, so I can't speak too much on it. But that's my take on Disney. It looks very bearish. Under $84, under 84.50. It looks like Target. Did Target ever recover? Let's take a look. Target never recovered. Never recovered. Came up, made new lows, and then tried like. And what do these guys have in common? Hate to say it. What do they have in common? Wokeness. That's what they have in common. They have wokeness in common. This is not political, but who knows? Maybe, like, can you really make money being woke, or do you got to be capitalist? I think you got to be a capitalist. Like, you got to tell it how it is, right? Who knows? Anyways, it is what it is. We'll look at Roku. What up, big man's coming? Appreciate the support on YouTube. Don't forget to hit the likes, and I appreciate you guys hit the likes on there, and YouTube get the algorithm up again. Roku did it again. Let's look at Roku. Yeah, I like Roku actually. They're sort of doing something no one's done. Asan, I think you asked about Roku before. I had that big dip. Is this the weekly? No, this is a daily. Had that big dip. Now it's making new highs. So that would have been your entry to some degree. And it's getting above what 83.50. It looks like 83.50 is the level. So Roku grinding higher. That looks straight. I like Roku. See, these assets are up, right? Risk assets are going higher right now. So I again, like I said, the reverse repo facility, the money parked at the Fed is leaving, coming into risk assets. That's what it looks like, right? Why hold these treasuries when the Fed pauses? And because they're anticipating the Fed pause. And if the Fed does pause, you're getting closer to the end of the rate hiking cycle. You're getting closer to stock market bidding up because the risks are dissipating. Other than oil, shelter's coming down, earnings are getting turned up. So if earnings turn up, why try to collect 5% in a year when markets are moving 20% in 3 months, right? Why do that? So I think that's kind of the play there. Just taking a look over at this price action, and maybe I'm wrong, but that's what it looks like at the moment. Meta, maybe an entry here. This thing's been up so much. Meta's a cash cow. Microsoft breaking out. Well, on the trend anyways, coming back to trend. That was a breakout right there for Microsoft. That broke reverse head and shoulders. I can see it. I can see it really clear. You got that reverse head and shoulders. Right, here's your shoulder. It's not like deep, but you got your next shoulder. Boom, breakout, right? Breakout above 325. Chugging higher slowly. Microsoft just chugs. It just, it sort of just like chugs slower or chugs higher, very slow. So I expect that for Microsoft looking forward. Netflix. Ooh, Netflix is explosive. I never really liked it as a trade, but I mean, it looks pretty interesting. I don't really right now. Netflix kind of sucks. I don't see nothing good on Netflix, but who knows? People love it. People love it, and they're not going to dump their subscriptions, right? They're gonna not buy a new car, and they're gonna buy more Netflix. They're going to keep their subscription-based businesses. So yeah, big breakout on Netflix. Um, Pretty nice there. What else did you got here? ZM, AMZN, or it's where it's at. Yep, I remember Tesla around 105. Yep, Disney great, but I think it's a long term. Yeah, it's probably long term. I mean, I'm not saying Disney is like a trash company. I just personally, I'm more of a growth guy. I don't. It's not a growth stock to me. It's definitely not a growth stock. It's more of a value, and I think a lot of value stocks are traps. LAC, decent play. What is LAC? I've heard of that before. LAC? Oh, lithium. Is this energy? I think I saw uranium was moving higher. Wow, this is a big pattern here. I don't know much about it, so I couldn't give you the fundamentals. When it comes to something I don't know, I don't really just look at the technicals, but I don't know how credible this could be just because I'm not under. Maybe this sounds like if it's a lithium company and they're legit, they're a monopoly, right? They own a lot of market share. Well, the EV revolution is coming, right? That's the only thing I could say here for this. Dang, this thing moved up quick in the past. Was that? Oh, yeah, it looks like a big mover. Is that there's going to be a big demand for lithium to build these batteries, right? Energy storage, EVs, whatever it is. So maybe it has a secular story to it. The real question is for lithium, do they dominate their field? Are they the best at what they do, right? Are they gaining revenue growth? How's their balance sheet? How's their balance sheet? What else is there? Are they innovate? I mean, I don't know. There's probably demand for the product. So that's all I could say about that. Yeah, politics and business don't mix well 100%. What about Twilio? Unless your business is talking politics, huh? That's a funny thing. Twilio. Oh yeah, Twilio. A lot of AI potential here. I think what did they made a deal with? Ooh, Twilio is moving. Okay, all right. Twilio is starting to move here. It is in this big consolidation, but Twilio is definitely an AI play. Very underrated AI play here for Twilio. It is breaking out of this falling wedge, and this is a bull wedge here, right? This is a bull falling. I mean, it's not the best pattern, but it's pretty clear. You have I call this a dragon wedge because you have the neck line like a dragon. It didn't really make new highs, but it starts to tighten up here, tightens, tighten, and then boom, there goes your momentum to the upside, and you're getting that momentum to the upside. So, and hey, there's a lot of resistance up here at 75. But if you were to try to get an entry, your stop is 58, right? If it gets below 58 and holds, you're out because it cannot hold the prior support where you had a lot of support jumping in there. So that's what I'd say. But Twilio, yeah, Twilio has a lot of. I remember this back in the day. This thing with Okta was moved. Did Okta ever move up from earnings? I know Okta had really. Oh, yep, Okta cybersecurity, right? You're going to see a lot of these plays catch a bid because this is B2B, right? There's no consumer buying Okta. What? Consumers don't use cybersecurity. It is businesses, right? And businesses are paying for cybersecurity because it's one of the biggest threats going forward. And these are going to catch a bid, in my view. Okta, Twilio, team, Atlassian. Remember this back in the day? They were the triple threat team, Twilio, and Okta. That was the triple threat for this, this new era of cloud computing, cybersecurity, and they've sold off a lot, but they're looking good. Yeah, tech is moving up. Look at that. Nice little uptrend there for team also. Something else to look into. And I think this is a global stock. Google looks great. Oh yeah, I miss Google. Didn't even look at Google. Google just grinding higher. I mean, don't expect anything less. Google grinding higher. I don't think I expect anything less there. Netflix very dangerous, hard to trade. Yeah, oil 100, SPY 500 this year. Let's go. Oil, hey, I don't really like oil being high, but maybe I'm wrong. Maybe the market can still chug higher from oil going up as long as core inflation comes down and nat gas doesn't spike. If you get nat gas moving up, then you're in trouble, right? Along with oil. So what is that scenario? How? Why is that? Well, I don't know. Maybe we get the exception and maybe we just go to all-time highs and then we sell off because it's like, all right, inflation can't go any lower. The Fed, I don't know. I'm sticking this more, 3 months out, 6 months out. I don't really see a scenario with super strong oil and the market still going higher, but I could be wrong. I could be definitely wrong on that. As long as a core comes down, maybe that's true. Tesla actually looks like a pending inverse head and shoulders on the weekly. I didn't even look at that. Let's check that out. Pending. I like that. A pending inverse head and shoulders. Oh yeah, you're right there. You are right. Um, I'll take off this. I like this point because it literally was the support from the break of trend. This was so bullish. This is where I bought 2 calls. I actually sold them at 257 at the top. I sold them at the top and I'm looking to get them back in. I'm looking to get back in. I should have bought one on last week. I wasn't sure, but I'll wait for this consolidation. So anyways, he says Carbide said the reverse head and shoulders. Let's go ahead and make this that's very bullish pattern. Here's your strong level, right? This is your key level, somewhere between 241, 245, whatever. And here's your reverse head and shoulders. See if I can see it. I don't know. It's kind of wonky. It's kind of wonky. Maybe it's just not that clear. What do I think about Tilray? I'll tell you what I think about Tilray. Yeah, I don't know. Tesla right now, I don't really see a head and shoulders carbides. You probably see it like, okay, I can see it in the price action as psychologically, there's buyer stepping in 100%. Unless you're dragging it from June, maybe from June. Maybe that's what you're doing. If you're dragging it from June, then yeah, that makes sense. Look at this. We go all the way back to June. There's your shoulder, there's your head, right? It just looks, it's not that clean, but it's possible. I think more so we're in this big uptrend, and I would just call it a falling wedge or a flag, very sharp flag pattern, or in the more immediate term, I think we need to hold 240. We got to hold 240. So, but yeah, it's bullish. It's definitely Tesla is very bullish, and there's a lot of catalysts. If you didn't watch the video, go check it out. All the Tesla catalysts. You got Cybertruck coming. Rumor has it. What up, carbides? Rumor has it. Okay, I'll look at that August 22 through 23 on the weekly. Oh, you're on the weekly. No wonder. My bad. Rumor has it that Cybertruck is coming September, October. So it's very bullish. Last time Model Y came out, it was explosive. And then you have FSD. I mean, that's the biggest. If we get full self-driving, Tesla's going straight to all-time highs. I'm gonna tell you right now, it's going straight to all-time highs if FSD comes out. I don't really think full self-driving is going to be out in the next earnings. It could be at the end of the year. Who knows? But the progression towards full self-driving, I think, is a catalyst. Just, okay, the regulators open this. Okay, full self-driving here. I think that's going to be a huge catalyst, especially for Tesla stock. Oh, you're looking at this. Are you looking at this gigantic? Oh, yeah. Carbides is looking at the big breakout. This is juicy. Yeah, I see what you're looking at now. Yeah, this is big. I still wish we had that guy on here. Remember, he was super bearish on Tesla. So right up against 300. Yep. Yeah, that's going to be a massive breakout. Also, if you go to look at this RSI. If there wasn't a strong buying signal, right? Buying pressure signal, it's the RSI just looking like an uptrend at the same time, and off the lows for the weekly. I've been saying this for a while. Tesla's going to go wild again. It's going to go wild again. It still hasn't made its big move. It's still unrealized. There's still a lot of shorts. We did see that wild move to the upside twice. Well, here goes the bigger one. I think this one will be bigger than the last two. The last one was last two was 100%, 100%, right? 100% move from 100 to 200, and then you had the big move 94% from, was this 150 to 300 basically. And now I think what you're going to get, if this is the low, if the market supports here, if the S&P goes higher, if earnings turn up, if the Fed does pause, if global liquidity starts to pick up, if China starts to stimulate, there's all these macro technical fundamental things happening. And if they do align, I think Tesla goes up an easy 100% back to all-time highs, causes more FOMO. 420 is what I have, I think, this year. I think we get to 420 this year, just if I had to take a guess. And then you have a big upper, even bigger move. So that's what I think. If that changes, hey, we'll see. So yeah, on the weekly, I see what you're talking about now. That's a big, it's a big reverse head and shoulders. Above with that break above 300, 315, somewhere around there. So what do I think about Tilray? TLRY. I remember the day Tilray exploded, and I was like, "What is this?" Everybody was chasing it back in the day. Was this it? Yeah, this was it. This was at the beginning. Tilray went from 24 to 3. Everybody was chasing. It went up 100%. In one day, it was up, man. It was crazy. Either way, what do I think about Tilray? I think you're gambling if you try to get in the stock. I just don't see. Now, I'm gonna preview this with. I'm not an expert on cannabis. I just don't see the energy as the I don't see the industry as being very profitable in this sort of way. You could probably profit off of it, but there's too much supply out there. There's just too much supply. People can grow their own. Um, I don't know if it's. I think you're probably going to make more money growing your own than you would investing in a stock, unless they get into like something new, some type of new products. Now, again, I don't know their Tilray's news, so I don't really know what their news is. I know there's some regulatory stuff in the making for possibly a trade. It is moving up right off the lows, $1.50. It's up to 3, but usually does that. It spike. It's still in a downtrend. It spikes and it comes back down. So I wouldn't hope on it. I think there's better quality plays out there than Tilray. So yeah, I don't know. Unless you know some insider stuff and you understand the industry really well, I would say nah, I don't like it. FSD isn't a sell the news event. Yeah, it probably is. I think you get FSD expectations drive the stock up tremendously, and then when it actually comes out, it sells off for a little bit. But it's just such an it sells off because it's already priced in. But by the time it sells off, it's going to be above all time highs, in my view. And look, next Monday or sometime, I'm putting together the catalyst for Bitcoin because we are at the precipice of a big breakout in crypto. That ETF is going to be coming. And I don't think people understand the massive. There's no like the supply is very suppressed. The demand, you turn that demand on for Bitcoin. And I'm more bullish on Ethereum, by the way, but I'm just saying in general, this is going to start the cycle and you're heading into an halvening. Like there's just so many catalysts. And the Bitcoin's at the precipice of breaking out here. And this changes a lot of things too. It's not just Bitcoin. You start getting a lot of stuff change in the market, and there's going to be a big chase for crypto when this does happen. You do want Nasdaq strong though, right? So Nasdaq staying strong is a good barometer for crypto in general. You want that to happen. Yeah, so that's what we're looking at there. ZS, I think they have earnings. Was that today? Look at another Zscaler, another cybersecurity breaking out. There's a lot of demand, and this comes in. This is today. Yeah, they have earnings today. I don't know if it's after or before. They already had them, but definitely these tech plays are. Oh, that the Zscaler breakout above 164. Yeah, clear breakout above 164. Your next resistance is like 188. So Zscaler looks good. That's another one. You got Okta, you got Team, you got Twilio, and you got Zscaler. Those are just in the back of my head because I remember how much they move in a bull market when tech. And what it is that big B2B businesses. What is this? What the heck did I just do? What it is B2B businesses start to invest in cybersecurity, and there's just a lot of demand for it. So you get this secular move, you get the cyclical move up for the next 6 to 8 months, and then they slow down. But definitely a big potential there for Zscaler. TSM, what happened to TSM? TSM still consolidating. Teladoc, come on, Teladoc Square at the lows. SoFi revving back up. Roku looks good. Palantir, Palantir stair-stepping its way back up. Palantir, I had that negative news on it. Palantir, if there was another. Like this is probably the best AI play, I think. Oracle broke out of that triangle, right? We had it drawn there. Open Door looks like it's been struggling a bit. Maybe it's out of steam for the moment. MicroStrategy still big opportunity here. Some people say this is better than the ETF because of how much Bitcoin they have. I don't know. There's a lot of short squeeze potential here. They're just very expensive options, but you do have pulling into the trend. I mean, if you knew when the ETF was coming out, man, you're gonna profit off this. Just the rumor of the ETF lifted back when BlackRock actually filed, it went up 75% on options. That's like 300%. Who knows? So If you could ever time MicroStrategy, which I would not suggest, I lost a lot of money in the last cycle trying to time MicroStrategy on a pullback. So I got burned on it. I'll keep it real. But hey, if you cash to the timing right, this thing is gonna fly, especially with all the shorts. There's a lot of people shorting it, so you get a short squeeze. Do you get a gamma squeeze? Nah, there's not that much short interest, but you will get a squeeze to some degree on that front. All right. So what else are we looking at here? EMPH, like I said, looking for that bearish divergence or that bullish divergence. You're getting it, right? The RSI is turning up. What is the signal for these solar stocks, right? What is the signal here? I think EMPH could really run. I just don't know if I want to bet on it yet. I'm going to stay away from it, but it does look good. CVNA, another short squeeze potential over 58. I'm not interested. It never was. I remember we talked about this when it was at what? I think around here. It was around $10, $11. Had that little wedge and it broke out. But I think it has more time to consolidate. I wouldn't bet on it. Costco, did it ever break out? This is the slowest mover in the world. Not interested. Not a grower. Coin. I mean, coin is literally like, where's the Bitcoin ETF? That's it, right? As soon as you get it, boom, coin takes off. Adobe, almost at all. Adobe climbing higher, another tech play that's going to carry the market, giant market cap. Airbnb. Oh, I don't know what's going on with Airbnb. I know a lot of people love it. I think the business is going to, I don't want to say it's going to fail. If they don't innovate, I think they're going to have trouble. Maybe I'm wrong, but I don't like the business model, kind of like Uber. I don't think they last. PayPal, man, I don't know what's going on with PayPal. They're struggling for sure. There's a lot of competition in that space. A lot of competition in the payment space for sure. Hey, thanks for the comments, guys. Palantir is nice, but the one day is showing a clear head and shoulders. I actually want to buy, but I have to wait. Okay. PLTR. Yeah, that move was so massive at the beginning. I think it's gonna take a couple months for it to really consolidate. I mean, if you can get in at $13, $14, yeah, for a long run hold, but that is a big head and shoulders there. And hey, this thing could sell. Imagine it sells off back to 11. If it does, it's great buy because it ain't going nowhere. But this is one of those stock. This is one of those names that if it gets crushed, you want to buy the fear. You want that fear if it gets crushed. All right, so let's look at what we have tomorrow. Piton, QS Path. Oh yeah, Unipath. I forgot about that one. There's so many names out here. Unipath grinding higher. I don't know the fundamentals of Unipath, but it does look like it just broke out of that downtrend. So this is an entry for Unipath. The hold of $16 is a good entry for Unipath. Still on trend, right? Still on trend. Looking pretty solid there for Unipath. What are they? AI? I don't know. I know they have a good catalyst, kind of like SoFi. I don't want to spend too much time. If you master everything, you're master of none. So I stay with Tesla and crypto. And right now, I'm very bullish on Chainlink. I think it's going to outperform every single stock that we've even went through when the time comes. All right. So Unipath QS, QuantumScape. Oh man, QuantumScape sounds like a movie. This sounds like one of those. You're waiting for a Hail Mary. I think I remember when this thing exploded. Yeah, QuantumScape. They cut the price, huh? Or they did something to the price. Man, I hope you're not baggy holding this forever. I don't know what they do. I mean, there's support here, but fundamentally, it makes me question what they do. Let me double check really quick. I'm kind of interested in QS. What do they do? This AI. Oh, auto parts. Oh, lithium metal batteries for electric vehicles. Okay, I see what you're saying. I see what you're looking at here. QuantumScape. So lithium, some more on the secular. You're looking at the secular move or the secular adoption of EV batteries. Okay. The question again is, are they gaining market share? Are they managing their balance sheet? Do they have any kind of free cash flow? Is their forward PE lower or higher? because I know there's a lot of people in that space. I really don't know about them, so I can't say much. They got downgraded a lot. Maybe there's some optimism there. Who knows? Peloton, man, Peloton is, boy, I never liked Peloton when it was going up. Peloton, I was like, bro, who, like, what is this? People need to go work out, not sit on their bike. This is like a rich person's thing, right? Nobody's gonna buy Peloton. I don't think there's enough demand for Peloton, to be honest with you. You need a very big secular shift in the culture for this to like go to like a lower end consumer, but I just don't see it happening. Hey, technically it could break out though. I mean, you could get some good news and it moves. I would never own it. I would trade it. I would never own it though. Dang, it got down to $5. This thing was at 172. Talk about a decline. I remember when it came out, I was like, it's not gonna last. I didn't understand why people are so hyped about Peloton. Young people, or most of the population, they do not want to be on a bike. They want to be at the gym or out in public or out getting some. They need to socialize or they need to be in nature or something. So I wouldn't bet on it. Maybe for the baby boomer generation. Then even that, I don't know. So yeah, that's my thoughts on that. AI is nearing. Let's see. AI, AI I heard is a scam. I don't know. I do not know. Hey, it's right on trend though. Man, talk about on trend. This thing is right on trend and climbing. So that looks like a crypto right there. Yeah, AI looks like a crypto type of stock. All right, well, let's see what we got tomorrow, right? Let's close it out. We'll see what we got tomorrow. Let's go through the data real quick. And then see how is the S&P closing today? Qs are up, S&P's up. S&P looks like it is rolling over and it's coming back to 445. But what do we have tomorrow? And looking at Euro, check this out for Europe. This was pretty positive. PPI is going extremely negative for the Eurozone. They're near the end of their hiking and their easing period, right? We're getting close to where global liquidity will start picking up, and I will keep track of global liquidity because I think that is the biggest factor that will drive markets higher, regardless of all the other headwinds, is global liquidity in general. Where's it coming from? This is outside of a Black Swan event, of course. All right, so tomorrow, EU retail sales are probably going to be slumped. Money supply for India, man, they've been increasing money supply. India's growing at the fastest pace of any economy on earth. They're probably going to surpass a lot more people. They're top 10. They're putting a bid in the market. Fed Collins speaks at 5:30 a.m. So we get more Fed speak. We get is it the beige book we get tomorrow? Maybe not tomorrow, but anyways, we get the S&P services index. This is going to be big. If services, so we're expected to come in at, I forgot there's no expectation really. It's just a model, huh? The forecast is the model for ISM services. Okay, so there is a consensus. All right. Pretty flat. So the consensus is that it comes in flat. 52 stays where it is. That'll be neutral. Let me see. If it goes higher, it might be bearish. If it goes lower, it might be kind of bearish. Stays where it's at. I think this is bullish if it stays in line. I think it's in line. Then you go to employment. Is employment declining? That's bullish. If business activity is declining, maybe not. Prices, you want those to stay where they're at, not go up too much. New orders, you want those up, signaling the business cycle is going to. Oh, you do have the Fed beige book tomorrow at 11 a.m. I'm not fully. I got to do some more research on how important that is as a signal. But yeah, you get some Fed speak. So I think the ISM and the Fed speaking tomorrow are going to be big. What does the ISM services tell us about the economy? Are services expanding, right? Do our supply chain managers seen an expansion happen or a contraction overall? An expansion would be good but if the numbers are too hot, then you have more room for the Fed to be a little more hawkish. If they're cooling, it's good. It's positive, right? As long as we don't like plunge tremendously. And then we have Fed speak. You got some China stuff in the afternoon. I don't think that's really. This is not a big week for news. I'll tell you this. This is not a big week for news. For the most part, it is price action, and I think usually what I've seen this whole cycle is that price action typically remains bullish whenever the Fed is not speaking. That's kind of what I've seen, and I mean like not the Fed speakers. They can say, well, the market, yeah, it's going to be swayed by the Fed speakers at the open, but the macro force is also a big deal there. Crypto's on pause, just waiting. Just waiting there. Let's see. And I'm coming out with some new charts also on TradingView, some new charts where you can look at the economy. It'll be easier instead of having to jump over to these other charts. So I'm working on that. We'll see, hopefully, to get this a little better. But this is the big thing, right? This is the big bullish take for me really quick. The ISM PMI survey. So I know this is a lot of data. Let's try to line this up. Okay, let's try to line this up a little bit. This is S&P. This is the ISM survey. And this is the reverse repo facility, right? And what we are starting to get here is that you see the S&P has been grinding higher, and it just so happens to match global liquidity here in white, right? Just so happens to match global liquidity to some degree. We just got a big push higher in global liquidity. It's really U.S. liquidity, but still, I think it's global. And this liquidity is coming into capital markets, typically pushes up risk assets. We see the Qs outperforming the SPY. I think this keeps up. Everybody knows in the fourth quarter, fiscal policy starts to hit. The ISM manufacturing, the business cycle is starting to bottom. Okay. And earnings are starting to get revised up. So there's a lot of, and the VIX is not responding. The VIX is just like whatever, right? So I think it's very bullish. The big risks, again, the dollar breakout, breaking above 105, 106, that would be a new shift higher. And oil just accelerating. If oil consolidates here, maybe the market will be okay. But if it accelerates tremendously, I don't see that happening. Demand is not that strong. They're cutting production simply because demand is weak. Okay. China demand is weak. So Russia's cutting, right? They're not cutting in the face of high demand. That'd be different. So I think this is a trader's breakout. We said we'll probably get a trading breakout if it gets above here. We'll see if it holds and if it just, how the price action works. Either way, that's all I have. Appreciate you guys. Riot platform. SPY can take a break this week. Yeah, SPY I think it's going to be a stock pickers market. India strong. Dr. Tanner for president. I don't even know who that is. Big man's coming. Thank you for the support, though. Big man's coming. Carbides, all you guys out there. Asan, Shubham, Dimaj, Laguna. Appreciate you guys out there. I'm bullish. I'm gonna stay bullish here. A lot of reasons why, and I'm gonna start doing some commentary also for the market, so you can get the highlights from Wall Street that are important. Hey, remember, Josh Brown is buying Zoom. Take a look. Take a look at Zoom over 75. Anyways, you guys stay blessed. I appreciate you. Get your workouts in, and I'll catch you tomorrow at 2:45 Eastern time. Stay blessed.